market meltdown, what the pros do to survive super sell-offs. In today's cover story, a Cisco insider says wearable tech is not the only growth area. Plus, the CEO of the Container Store explains how he keeps it all together and why Warner Brothers' latest flick is having an identity crisis. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning. I'm Angela Miles. It's Thursday, October 16th. In today's First Look, a panic attack grips Wall Street. The Dow drops an eye-popping 460 points. The S&P 500 breaks to 1821 as fears ratchet up over weak retail sales in September, signs of possible deflation, and Ebola. But the lesson of the session was stay calm. Perhaps it was positive comments by Fed officials, but the blue chips rallied back, closing down 173, the NASDAQ 12, and the S&P 16. Gold added on $7 and oil slipped by 27 cents. Tech to watch today, Netflix, which flickered out more than 25% after the close on earnings that show subscriber numbers are dimming because the company has increased its prices. eBay shares dropped 3% as the e-tailer lowered its sales outlook. And Apple has a big reveal planned for today. Speculation is high. New iPads and Apple Pay are here. Trader Todd Horwitz of Average Joe Options joins us now to sort out the trading action. Good to have you on the show today.
Good morning, Angie. What's up?
The market has been nuts. What did that sell-off mean? There was such a big turnaround.
You know, I think what you saw was a bunch of fear. You know, there's a lot of people on this that are in that really don't want to be in. And as soon as we see a little bit of pressure, you can hear people blaming it on Ebola, blaming it on everything. But the bottom line, it was just a pure fear smell off. And the funny thing is had the day gone out a little longer, it would have been like a great horse race. They might have been able to pull out a victory on the day with all the selling that they had.
Well, some people are also saying there was a big oil effect. As oil drifts lower, people are becoming more concerned. You're seeing money go into the dollar and, of course, treasuries.
You know, I think that's a great point. And weaker oil, you know, although we think about it at the pump, is not really necessarily better for the economy. But the treasuries could be very interesting. Now, I was kind of sorry to see them rally all the way back because when they were down and the 10-year was under 2%, I'm thinking, you know what? Maybe the housing buyers can get a better shot here to buy housing, and that would actually be pretty bullish for the economy. Exactly.
Let's talk about some of the pluses and minuses that are happening here. On the plus side, yesterday was a great buying opportunity for some people.
You know, absolutely. If you're looking to buy now, again, I'm still overall bearish on the market. I think we have a lot more work to do on the downside. But as a trader, there were some great buying opportunities. And if you saw some of your stocks that came down to good levels that you want to own them at, there was no problem with buying there either. One of the things I always want everybody to understand is don't ever panic when you see a market like it did yesterday. What you want to do is look for good stocks that you want to own at a price you want to own them. If you can buy them, don't worry about the market, just buy them.
How much more do you want this market to fall, Bob?
Well, I think, truthfully, I think we're going down at least another 10 or 15% minimum.
Ouch, that hurt. But thank you for being on the show today.
Thank you.
Chuck Coppola has the latest on how airports are responding to the Ebola outbreak. Chuck.
Good morning, Angie. More U.S. airports are on alert. Health officials are screening inbound passengers from 3 West African countries for fevers, a symptom of the Ebola virus. Screenings start today at airports in Washington, D.C., Chicago, Atlanta, and Newark. New York's JFK began screenings last week. Meanwhile, airline stocks had a bumpy landing yesterday on word that an infected healthcare worker took a flight on Frontier Airlines.
I would think that they are going to continue to be very news-driven. As more people, are struck with Ebola, or as the CDC says that they have a better handle on it, that's really what's going to drive the trading here.
That was TD Ameritrade's Joe Keenahan. Meanwhile, President Obama is directing the Centers for Disease Control to dispatch SWAT teams of Ebola experts to hospitals caring for infected patients within 24 hours.
The economy is improving. The budget deficit hit its lowest level since President Obama took office. Treasury Secretary Jack Lew calls it the most rapid reduction in the budget deficit since World War II. The deficit has fallen from a record $1.4 trillion in 2009 to $483 billion. The budget is improving on job growth, shrinking spending by the government, including health care, and the GOP budget cuts.
In today's cover story, some insight into where Cisco Systems may be headed. The Chief Technology and Strategy Officer for Cisco Systems says consumer hype right now may be about wearable technology, but Cisco sees a brighter future in smart cities. At a Chicago tech conference called Venture Summit, Padmasree Warrior of Cisco Systems predicted a surge of interconnected devices at homes, throughout business enterprise, and public work systems, with standardization necessary to pull them all together.
We're bringing thought leaders, different companies from different industry verticals, because we don't know everything about transportation or building construction. There are other companies who know that space. It's interesting to work with Honeywell or Rockwell Automation, those kinds of companies who understand that space, that can guide us and create implementation guides on what needs to be standardized.
Cisco is largely a hardware company. The business opportunity Cisco envisions could be worth $14.4 trillion during the next 10 years. Everything from improved sensors for manufacturing, asset tracking, and civic improvements for the flow of energy and traffic.
We will be talking to our homes and cars. We already kind of talk to our cars, or our car talks to us, and our device talks to us today, and then we will reciprocate that. I think gesture will be hugely important as well, and so I think gesture and how we look at gesture recognition, what those things mean, will be important.
So far, Cisco has 250 public customers, and with so much interconnection, admits that the need for cybersecurity will only climb.
Security to this point used to be on the device level, right? Password for the device or locking the device. Now it has to know that it's useless unless it's with me.
In addition, Cisco's developed what it calls a fog computing platform. It's similar to cloud computing, but allows companies to process data locally for such places as oil rigs where connectivity may be limited. Still, Cisco is restructuring its workforce. This week it announced 900 layoffs in San Jose, California, and follows 6,000 layoffs globally. That took effect this month. That represents, by the way, about 8% of its workforce.
IPO investing has been a bright spot for the stock market. Billionaire investor J.B. Pritzker calls initial public offerings key to the fourth quarter.
The thing that you've got to really pay attention to is the IPO market. That's certainly one aspect of venture investing, because we're all looking to exit at some point, and IPO is an indication.
U.S. companies raised an estimated $47 billion this year, the highest amount since the dot-com craze of 2001. However, research firm CB Insights reports while VC spending hit a robust $13.9 billion in the second quarter, venture capitalists became tight-fisted in the third quarter, with VC funding dropping 29% to $9.7 billion on a 10% decline in deals.
One company is taking a rain check on IPO plans. Bloomberg News reports Good Technology is postponing its IPO because of a spike in market volatility. A spokeswoman tells Bloomberg that nothing has changed since the company's IPO filing in May, but sources tell Bloomberg that the tech company will wait until 2015 to list shares. The IPO market has been in a cool-down phase since Alibaba went public.
This year's mega IPO, Alibaba, is making more of a move into the U.S. market. Alipay, the spin-off of Chinese e-commerce giant Alibaba, is launching ePass. ePass makes it possible for Chinese customers to buy products from stores in America. Gap stores are among U.S. retailers beta testing Alipay and ePass. Alibaba shares gained 65 cents Wednesday.
Reports say talks are over between HP and EMC. The New York Times reports Hewlett-Packard and cloud computing company EMC are no longer in talks to merge. HP said yesterday that it's resuming its stock buyback program, which signaled to investors that merger talks are off. Previously, it halted buybacks because it said it was holding non-public information. The SEC prohibits companies from repurchasing stock while withholding information from shareholders. Neither company is commenting. HP shares traded last at $32.80. That's down 1 3/4%.
Chipmaker Qualcomm is paying $2.5 billion to connect with British tech company CSR. Qualcomm is the world's biggest chipmaker for mobile devices. CSR pioneered wireless Bluetooth technology.
That's actually become the foundation of a technology we call the Internet of Things, which is going to connect things like Apple's newest watch to your phone, connected door locks.
U.S. chip company Microchip made a bid for CSR, but its bid was rejected. Microchip recently gave the stock market a shock by warning that the chip industry is going to likely suffer a downturn in upcoming quarters.
Relationship drama ensues between two drug makers. Shire shares took a 30% hit yesterday as investors reacted to a statement from AbbVie. AbbVie revealed that it is reconsidering a deal to acquire Shire for $55 billion. That news comes as the government cracks down on companies moving headquarters overseas. Shire is based in Ireland. It could collect a $1.6 billion breakup fee from AbbVie. AbbVie's board meets next week to discuss the deal.
Demand is picking up at General Motors. The automaker reports a 7.9% sales gain in the U.S., led by an increase in large pickup trucks. Worldwide, GM sales grew by 2%, making it the best third quarter since the 80s. China was the biggest driver. However, analysts are concerned about sales slowdowns in Europe and South America.
Walmart scales back. The retailer revealed at an analyst meeting it's reducing its full-year sales forecast for 2015. The stronger dollar and cuts to the government's food stamp program are hurting Walmart's profits. Walmart's also scaling down plans for brick and mortar stores to concentrate on its online business. Shares fell nearly $3.
Nike is accusing Walmart and 31 other retailers of selling copycats of its Converse Chuck Taylor basketball shoes. Nike has filed a lawsuit after sending out 180 letters during the past few years asking retailers to knock it off with the knockoffs. The Converse company says imitations are injuring the brand. Walmart has no comment. Turning to the economic calendar for today, it's initial and continuing unemployment claims, industrial production, capacity utilization, Philly Fed, NAHB housing market index, natural gas inventories, crude inventories, the Treasury budget for September, and tick flows. On the earnings calendar, Mattel, Winnebago, Advanced Micro Devices, Google, Goldman Sachs, Marriott, Baxter, Philip Morris, Delta, and Super Value. Still to come, traders are really gearing up for Goldman Sachs earnings today. Plus, in movies and money, what could save Warner Brothers at the box office? And the CEO of the Container Store is opening up about his past. You won't believe who was his college roommate. Stay with us.
Whole Foods is now ranking its produce based on sustainability. The chain will rate produce on a 3-tier scale of good, better, or best. The ratings factor in how much pesticides are used by farmers and the amount of water and energy used for crops. The change comes as Whole Foods faces competition from supermarket chains jumping into the market for all natural products.
The CEOs of Whole Foods and the Container Store were college roommates who both found great success in the retail industry. Kip Tindall, the CEO and chairman of the Container Store, is out with a new book, Uncontainable. He joins us now. That is unbelievable that you guys were roommates. Did you plot and plan way back then?
Well, you know, Angela, that's not what we talked about in college. We weren't talking about retail or business philosophy. We were talking about girls and whatever. But it is amazing. We both went out and started retail businesses, and not only just retail businesses, but ones that really practice this concept of conscious capitalism, sort of a different way of doing business, and very proud of that. That's what the book Uncontainable about, is how passion, commitment, and conscious capitalism built a business where everybody thrives.
And you are very conscious. In fact, you say it's better to pay employees more money, which is a big debate going on right now in our nation. So how much are you paying your employees, and how is that working out for you?
Customers want to be helped by great people, and employees want to work alongside of other great people. So if you hire somebody that's 3 times as effective as somebody else, you can absolutely afford to pay them 50 to 100% above industry average.
What are your concerns now? Because how many containers do we need? People are starting to downsize. That's becoming in vogue, and you had to lower your sales forecast for the second time this year. What are you seeing? What's happening out there?
We are growing faster, and we have never felt more excited and confident of our future. This past quarter, we had comp store sales were down 0.4%, but earnings were up 38%. You know, gross margin was up. Occasionally in our history, we'll have store traffic be down 1 or 2% more than we expected, and that's happened recently. I think there's a little bit of sluggishness going on in retail. There's not just us, a number of retailers are seeing sales not quite where they want to be. What we're selling is time. Being organized gives you a little more time to get everything you want done in a day. And how many of your viewers have a lot of time on their hands?
Very good point. Thank you for talking with us today. Again, the book is Uncontainable, and this is Kip Tindall, chairman and CEO of the Container Store.
Halo, the taxi hailing app, hugely popular in Europe, is pulling out of the U.S. and Canada. A company based in London says there was just too much competition coming from Uber and Lyft. Halo is designed for cab drivers to connect with passengers. Uber and Lyft offer ride sharing.
Coming up, why Goldman Sachs earnings could offer clues into how the rich are getting richer. Plus, our movie critic is getting judgmental about a new flick at the box office. Gone Girl is going strong at the box office, according to our film critic. He's here now with a rundown from the box office. Good to have you on set with us as always.
Thank you.
Gone Girl doing really well so far, Eric.
Yeah, tremendous word of mouth, and we've talked a lot this year about sort of #1 films, big hits that have had tremendous drops throughout the year, and Gone Girl is now one of them, next only to the Lego Movie, the second smallest drop for a number one film this year.
At the box office over the weekend, Gone Girl came in with $26 million, followed by Dracula Untold at $23 million, Alexander and the Terrible, Horrible, No Good, Very Bad Day at $18 million. I love saying that. Number 4, Annabelle at $15 million, and number 5, The Judge at $13 million. And you suspected there could be trouble for The Judge.
Yeah, well, adults already have one big adult, based film out there with Gone Girl, and I think they would rather see a film with a lot of mystery behind it rather than a film that the mystery seems to be what it's actually about. So Gone Girl is out there, and The Judge, a $50 million production through Robert Downey's production company, $30 million in advertising and whatnot. It doesn't add up to a good success for Warner Brothers, who had a solid low-budget hit with Annabelle last week. And it's, the timing of Robert Downey announcing that he's going to be in Captain America 3 comes right after The Judge does poorly. So,
are there some films that could help Warner Brothers? Because we have a number of them that are upcoming, including Horrible Bosses 2, Inherent Vice, The Hobbit, The Battle of the Five Armies, and American Sniper.
Yeah, there's definitely some hope for Warner Brothers to finish off the year on a good note. Horrible Bosses 2, a sequel to a very solid hit from them from a few summers ago. That's opening around Thanksgiving. Inherent Vice, they'll be going more for awards and Oscars rather than box office. The Hobbit's going to be a huge smash, maybe even $1 billion around the world for that one. And American Sniper, Clint Eastwood's film with Bradley Cooper, I think is going to draw some interest. If the reviews are good, the box office will be there too.
This weekend, topping the box office list, it is The Best of Me, and I'm a huge romantic, but
Yeah,
I don't
Nicholas
know,
Sparks.
I'm a little nervous about this one, yeah. Also, The Book of Life and Fury, and you've seen Fury.
I've seen Fury, and I enjoy Fury very much. A very tough World War II film, Brad Pitt and tank with a bunch of guys, and it reminds me a lot of my story of my grandfather, actually. But this is a film I believe is going to be #1 this week. It's going to take a little bit of the adult audience away from Gone Girl. It's probably going to be kind of close at the top, but I think it's going to be Fury and Gone Girl and everything else after that.
Hey, some great films to watch. So
Absolutely.
That's wonderful. Thank you, Eric.
Thank you.
Still ahead, why profits from trading will be critical to Goldman Sachs earnings. Chart Talk is next. CMZ Trading joins us now in quick take on Bank of America off of earnings. The company had some issues after spending about, $5.3 billion in the third quarter alone to settle some of its deals with the government over mortgage-backed securities. The stock sold off about 4.6%. What do you think of that move, Matt?
Well, it tells you there's a little bit of fear in the marketplace. The stock's had a pretty good run, and people sold it really aggressively yesterday.
Next up, we have Goldman Sachs coming out this morning. Now, the options market is implying maybe a larger move than normal for Goldman Sachs.
Yeah, they've beaten 10 quarters in a row. People have really upped their estimates for this stock, so I think people are going to be watching. Some of the other banks have had really good trading revenues, and that's one thing that Goldman really excels at. So after a rough year last year, we know they've had good stock underwriting. Their trading is going to be in focus, and I think people are betting on the upside.
So is the bond market, along with, let's say, the stock market, just handing the banks money with all this great trading that's been happening?
Well, I think it's actually been somewhat of a tough environment the last few years up until recently for them, just because it's been a low volatility environment and, maybe not as many opportunities for them. But as things have heated up, as some of their competitors have come in with pretty good numbers, I think people are speculating that, hey, Goldman is the best at trading, and they are, and maybe that'll translate to their bottom line. So definitely something to watch.
Thank you, Matt.
Thank you.
We are out of time for today. Coming up Friday, it's a wage rage. Traders Unplugged. The guys are in uproar as retailers worry that low wages will hurt profits. From all of us at First Business, have a great Thursday.